All right. Well, stay tuned with Token Metrics. I think people need to give legacy markets a chance to open up before they start making decisions. So the good news is institutions are involved in crypto. The bad news is institutions are involved in crypto. All right. So I've got my slide up here and I'm going to kick off the market update. Okay.
All right. Sounds good.
Okay. Now, you are probably sitting at home going, oh my God, what is going on? I go to sleep at ETH is at 1,500 and then I sleep in and it's, I don't know, below 1,300. What's going on? Same thing with Bitcoin. So here's what's happening. I'm going to go through the legacy part later and start with crypto. But the bottom line is there's a problem in legacy. And because there's a problem in legacy, that's stocks and bonds, selling and hedging pressure is spilling over into crypto. Remember, crypto has Bitcoin and Ethereum futures. So if a big player wants to sell something, short something as a hedge, they can pick on crypto, particularly over a weekend. So let's start with Bitcoin and just let's see what's going on. Okay. On the left, we have FOMO, right? We have Bitcoin absolutely going to 50 something K. Everyone piles in, Elon Musk involved. And then what? Okay. It falls down, it goes sideways, and then institutions hit it and people sort of panic and it dips below 45K. Now, I think if Bitcoin comes back and goes above 47K, everything's going to be all right. Simple as that. But if Bitcoin fails at 47K, I think you could be looking at a move all the way down to 38K. All right. Now, with ETH, let's talk about this. ETH is moving in a way that honestly, it's sort of unbelievable given our view of what we think. ETH didn't outperform Bitcoin as the market rose. That was a red flag. I kept saying it. And then I stopped saying it. And typically that's the top, right? So if it happened to you, it happened to me, it happened to all of us. Everybody somehow has gotten the impression that ETH gas fees mean that ETH's dead or that there are other coins that are going to sort of take ETH's place. Now that's totally ridiculous in our minds, but we have to follow what Mr. Market is saying. Right now, I know this chart's kind of busy. I would say if ETH is getting resistance between 1390 and 1425, that you have to be ready for 1200. Long-term players can start dollar cost averaging anywhere underneath 1400. If, this is the key word, if there's a problem with legacy next week, I think ETH could hit 917. That's not because there's anything wrong with ETH. That's not because there's anything wrong with crypto. You just have to understand that all of these asset classes are in bed together. Okay, now let's look at Total 2 on TradingView. This is crypto market cap without Bitcoin. Okay. Now, one thing you're going to notice is that if you start in the bottom left, you know, total crypto market cap for alts, right? Everything except Bitcoin did nothing but go straight up. And how did that happen? Well, that's because everybody came in from Robinhood. That's because a lot of equity investors, the protest trade against legacy, just everyone piled in and they bought whatever was on Coinbase Pro. So if you owned Coinbase and Kraken altcoins, you got yourself a 3X in a matter of weeks. You know, Total 2 went from 440 billion to 680 billion in, like I said, roughly 2.5 weeks. Now, what has happened is most of that move has been unwound. And if there's a final leg lower in Total 2, all of that move will be unwound. Now you're like, well, what does that mean? Well, that regrettably means a lot of new people, and maybe not new people, who FOMO'd in to crypto, okay, because they were just excited to be here and just bought whatever was going up, are suddenly going to be in the red. Now, visually, you have to think about this a little bit. 1 minute, you have a 3X. You just get to crypto, you push a button, you have a 3X in 2 weeks. And in your mind, it feels like it's going up forever. Really, it does. The euphoria is so incredible that you're just like, all I want to do is stare at my screen and see my P&L go up every day. And then the next thing you know, you're getting washed out. Most of your profit's gone. You try to hang in there, but the second you start losing your initial investment, that's when the panic selling can start. So most of the move in altcoins has been unwound, and I've got some concerns that, you can lose another 50 to 100 billion in market cap off altcoins. Okay? Because again, it's unfortunate, but markets tend to do what hurts the most people. So if you're a winner and you took your money, great. If you've got a little money and you're wondering whether you should take it, if you're wondering and there's a rally on Monday, take it. You can always get back in. Okay, now let's look at DeFi. This is the DeFi perp contract. Okay, so it just measures an index of DeFi coins. So rather than looking at 10 or 12 different coins, I'm just going to look at DeFi overall. To me, this looks like a classic double top. What does that mean? Well, like I said, everybody who bought since February 8th is now underwater in DeFi futures. Now, if there is no rally on Monday, or if the rally that we're currently witnessing fails, okay, there is a lot of downside in DeFi. DeFi could take out all of February and part of January. So if you FOMO'd in to Coinbase alts and DeFi, and you're wondering, what should I do? There's an old Wall Street motto from people who, like me, who used to work at banks. You can never get fired taking profits. If you don't know what to do, take the money. Now, let's look at the market cap chart. All right. As Ian noted, Cardano is now at number 3. So you have to tip your hat to the Cardano bulls. This thing went from 16 cents to $1.50 and took the number 3 spot. Now, what is wrong with this picture? Well, there's Cardano at 3, Polkadot at 5, and Binance at 6. Now, why are Cardano, Polkadot, and Binance all, I don't know, at 30 to 40 billion market cap? There's one simple reason. There is a belief that there is something wrong with Ethereum and that somebody can challenge Ethereum easily. Okay? So I didn't say nobody can challenge Ethereum, because Polkadot is certainly going to be robust when it comes out. But these instruments are being traded as if Ethereum's going to die tomorrow. Not only that, but the market caps of these like Ethereum replacements are twice as high as things like Bitcoin Cash and Litecoin, which can be used as money and are on PayPal. Yes, those coins have gotten hammered. Yes, they are not sexy DeFi coins. But I don't understand why Cardano has a $42 billion market cap, right? And even things like Uniswap, Bitcoin Cash, and Litecoin are at $6 billion. Sometimes I think it should be the other way around. If there was a $40 billion, if there was a $20 or $30 billion coin, sometimes I think it should be Uniswap. I mean, Coinbase is worth $100 million on their IPO valuation as of now. So this whole chart is just a complete mess, right? Like Cardano, Polkadot, and Binance Coin, they have to go down a lot in order to unwind this ludicrous idea that there's something wrong with Ethereum. Because I can tell you right now, I've talked to our analysts who are looking into like the immediate future for Ethereum, as in like the next 3 to 6 months. And the bullish case is so compelling. It's actually hard to not be constructive here at 1,300. You know, I'm almost like, wow, you know, that really looks like a discounted price after what we've seen. However, like I said, I'll go into later, legacy is involved, and this would not be the first time in the history of markets where something gets hammered right before the world is about to change and everything is about to go in its favor. I think the last time I saw this was things like Amazon getting drilled or Google getting hammered in 2008, you know, right before all that stuff became revolutionary. So in sum, with crypto, this market cap chart, this has just got to be completely rearranged. Okay. Now, the question I never get enough of, what about Polkadot? Okay, so Polkadot is robust. Polkadot altcoin fever is very high, way too high if you asked me. Now, frequently, somebody who's holding Polkadot currently has watched this market gyrate over the weekend, and they probably think that they're safe because Polkadot has not moved much. Now, from what I'm seeing, when you have this kind of P&L destruction, remember the DeFi example of gains being wiped out? When you get this kind of environment, no one is safe. And the people who are the least safe are the people who think they are safe, which would probably be Polkadot holders and Cardano. Is there anything wrong with Polkadot? No. Is there anything wrong with Cardano? No. Could Polkadot go from 34 to 20, even though there's nothing wrong with it? Oh, yeah. It could happen. And it probably is going to happen if there's trouble in legacy. So if you FOMO'd into ETH alternatives and you've got money in the trade, I would seriously encourage you to think about taking some of that money off the table. If Polkadot's going to 100, you can always get back in. If Polkadot goes to 20 and you didn't take any profits, you're going to mess up the most important thing you have to trade crypto, and that's your head. Okay, Chainlink is back on my radar. Let's talk about this. Chainlink is a number 5 rated crypto. Now, Link had a really nice rally, and it attacked a technical I had at 37. And sellers took over up there, and it stopped short. And it went straight back down to a point around 24. Now, if Chainlink holds 24 and DOT holds 34, then, you know, everything is okay. But if you start to see Chainlink and Polkadot start to break down, there is going to be a lot more selling in this market. Last week and all this year, I was thinking sell in May and go away. I still hope that that's right. But I can tell you right now, if Chainlink and Polkadot start to break down, don't hesitate to make a move. Now, let's talk about total crypto market cap. I was on this show in a borderline state of disbelief that total crypto market cap for all of crypto in 3 weeks went from 1 trillion to 1.8 trillion on a line, right? It happened in about 3 weeks. And as you can see by the orange line there, it was kind of a nice little parabola straight up, right? The perfect crypto moonshot. Now, what happens when you break these kind of parabolas? Well, frequently what can happen is there can be a huge unwind trade, and it can be abrupt and nasty. For anybody out there who's ever taken physics, there's the theory of speed, magnitude, and direction. What goes up one way can go down exactly the same way. Now, folks, don't get me wrong. I don't want that to happen. No one wants that to happen. But my job's to read charts. So when I look at this, I'm like, it only takes one bad thing to happen in legacy. If crypto market cap total on TradingView is below like 1.4 trillion, there's risk it could go back to 1. You could lose 400 billion in market cap in a flash. That's a lot, right? And that's going to affect the altcoins that you have. Now, Cardano. Hats off to the Cardano people, right? The way I charted this, $1.50 was like the extreme point where the rally could go. And it turns out it actually went there, right? This structure, these Fibonacci extension lines worked really well. You know what, folks? When it comes to Cardano, if you made money, if something went from 10 cents to $1.50 in 2 months, even if this is the next Ethereum, I think you should take the money, right? That's so much gratification in a really short period of time that a lot of people who hodled Cardano for years, right? They had to earn their money by sitting there and watching this thing be virtually dead. I don't know if this should be the number 3 cryptocurrency or not. I just know that when something goes from 10 cents to $1.50 and the rest of the market looks like it wants to fall out of bed, it's an illusion to think that you're safe in any one particular coin when we're in a P&L destruction environment. So I'm not hating on Cardano. I'm not hating on Polkadot. I'm just saying Mr. Ugly, Mr. Bad Man that's wrecking portfolios everywhere, including legacy, is probably coming for Cardano. Now, let's talk about legacy. A lot of people in our private group been asking for help on this, and I'm going to do my best to explain this to you as simple as I can. Now, when the U.S. government needs to spend more money than it has, it issues bonds. It like opens up a window and says, okay, we need to borrow money. Come give us the money and we'll give you some bonds or some IOUs, just like your buddy trying to borrow money from you on Saturday night. And Uncle Sam has to do this regularly. And lately, obviously, with the government printing money and handing out money for COVID relief, the need for the U.S. government to borrow more and more money by issuing more and more bonds, okay, is ongoing. Now, what happened this week was that the government went to issue an obscure bond called the 7-year note. So the government asked Wall Street and the world, please tell us what price you will give us, and we will give you 7-year bonds. Okay, to make a long story short, the auction was a disaster. This is a tweet from probably one of the top 5 smartest people in the bond market. And the first line says, the worst 7-year auction history. Okay, the last sentence, this is how auctions look when bonds are radioactive. Now, when bonds are radioactive, interest rates go up. When bonds are radioactive and the credibility of the U.S. government is in question, this can rattle legacy assets dramatically. Now, in crypto, we're like, oh, well, of course that's all nonsense. We know that. That's why we're in crypto. However, this is an unusual case where everybody has FOMO, and all of a sudden, there's a big problem in legacy. Now, you will undoubtedly say, well, so what? There's a problem in legacy, whatever. The Fed will just come in and save the day. Now, hold on a second. This 7-year auction was so bad, and it was so surprisingly bad, that this tweet from this economist says the Fed can, in theory, increase its buying again. In other words, the Fed can come in and print money and buy the bonds. but it would be a very controversial step. In other words, we all know that the whole government Fed thing is phony baloney. We know that they print money to fund government spending. But can the Fed really come in and be that obvious and save an auction that was such a public disaster? Or does the Fed have to let capital markets fall apart? Let legacy blow up. Let legacy take crypto with it. Then, after legacy blows up, everybody will forget about the bad bond auction, and all they will say is, Federal Reserve, please turn on the printing press and save us the way you did back in March. So, what does that mean? Well, here are junk bonds. That's HYG on TradingView. Now, this market is comprised of companies that aren't doing so well, and the market charges them a higher rate of interest to borrow money. These bonds have done great because the Fed has been buying them because they're printing about $120 billion a month. And they're using that money to buy these type of assets. But as you can see in the top right-hand corner, junk bonds are falling apart. QQQ, NASDAQ 100. Okay, your Apples, your Microsofts. You're going to notice, looking at the two black arrows, that it looks the same as it did 1 year ago, right? Big thrust up, everybody euphoric in January, and then all of a sudden, last year it was COVID, and this year it would be the threat of the credibility of the United States government. This is not good for speculative assets that are wildly overvalued. Not only that, but people not only FOMO'd into crypto, but they also FOMO'd into all these big tech stocks. Money inflows into these stocks were massive at the start of the year. Call option buying in equities in January was the biggest it has ever been. And QQQ wiped out 4 weeks worth of gains in about 3 days. That's not obvious from looking at the charts. But again, everybody who FOMO'd in equities is now underwater. Okay. FANG. You may have heard of this. Tech companies, social media, Netflix, etc. Right? These stocks have done exactly the same thing that they did last year, right? Everybody FOMOs in, and then something negative happens. It turns around and breaks the big Gann line, and then what? Now, when we look at this, you're like, gee, Bill, great market update, but I was here for crypto, not FANG. But what I'm here to say is that this relationship between legacy and crypto is something you have to take seriously. If you were operating a hedge fund and you were long stocks and crypto, you made so much money in 2 months, you made your entire year. You made 2 years. And there's been a lot of talk on Twitter about whales selling in crypto. Now, I don't know who that is, but my guess is that would be hedge funds going, we are selling, we are done, right? We made 300% in 3 weeks. And we didn't have to take crazy risk. We're out. Especially people who have been watching interest rates rise. Okay, so here's my bottom line. Don't think that something bad can't happen to you, okay? Because it can. Now, I want you to make money in crypto. I want you to achieve your dreams. But I don't want you to get wrecked. So you can buy dips and trade in crypto. And if the Fed comes in to save legacy, great. We'll laugh and remember that 1300 and the ETH was a bottom. But if something happens next week in legacy, you need to protect yourself, especially if you're new and especially if you still have profits in altcoins. And that's the market update.
Token Metrics is a cryptocurrency investment platform that helps users leverage machine learning to become better crypto investors. Our in-depth analysis helps eliminate the emotions of investing, find profitable investment opportunities, and filters out scams. Learn more at tokenmetrics.com.